Good afternoon. I'm Brent Wilsey.
And I'm Chase Wilsey. And welcome to Friday.
Yes, Friday, not just Friday, but Veterans Day. So we want to thank all the veterans out there that served our country and so forth.
Yeah, it's so much appreciation for everyone that serves our country. Such an important thing and respectable thing that you can do for this great country.
Yeah, and I want to thank all the people because I'm a veteran as well. We put a picture on there back when I was 17 going into the Army. So I want to thank all those that either liked the picture or gave comments, and still early, but still I want to thank everybody for their kind words that they put to me. So, but our job here today is to help you become a smarter investor, help you understand investments and so forth. And today we're talking about buying low, selling high in our smart investing briefing here. So let's get right into it here. Don't know where that came from. Don't let new highs scare you away, because this is happening. We're seeing that now that Donald Trump is the future president, and we thought the market was going to go down. No, we're hitting new highs, and people are getting scared, aren't they?
Oh, absolutely. And the first thing to realize is that this is a market of stocks, not a stock market. Investing really should not be an emotional game, but a lot of people make it an emotional game. It's about buying not into the hype.
Not into the hype. And if they watch our posts and read what we do on our workshops, it's all about the numbers. You're buying businesses. You're buying small pieces of a large company. You're not buying a stock, a gambling chip. It just, look at what you're doing here.
Yeah, and as I said, it's a market of stocks. Now what this means, I like to use this analogy, it's like going in the grocery store or market. And you go around, you don't go and you just pick up a basket and you leave. You know, the pre-selected basket. No, you pick up your basket and you go around and say, oh, I want this and I want that. Well, that's how you should build your portfolio. You shouldn't go in and select a pre-selected mutual fund or the S&P 500. You should go around and find those good quality companies to invest in.
Right. Now let's talk about why this is so hard to do. We're talking about buy low and sell high. Now we all know it's supposed to buy low, but what people don't get is when things are low is when there's concerns like, oh my gosh, who's going to win the election? Oh my gosh, Greece. Oh my gosh, we're going to lose our AAA credit rating. That is when you have to buy, because that's when things are low. When you have to sell high, people do what? They get all emotional again.
Oh, absolutely. And you know, it's if everything was going great, you would never get a good deal.
Right.
A lot of times when you get those deals at supermarkets, it's because they made too much of a certain product, so they have to discount it. You got to find those discounts in the market like you would shopping a lot of the times. And you know, you got to be patient. That's the most important thing when it comes to investing. And don't panic sell. Be a wise investor. A lot of that comes with common sense and patience, and that's how you make money in the market.
And also too, people don't want to sell high because they're so happy they made all this money, like, oh, this is the best ever. So their emotions take over on the other side where they're so happy they did well. But no, that's when you have to sell. When you're happy you did well, you got to get out. So important to be patient and don't panic sell, because that's what a lot of people did before the election.
Absolutely.
Yeah. So what we thought we'd do today for you is actually give you a company that we think could be a good buy. Let's talk about that company. Capital One Financial. We thought about getting our outfits for our Viking uniforms like they do, but we thought, no, we won't do that today. But Capital One right now, current price on 81. Their high is 81.25. The low 58. We see it went up, came back a little bit. Now it's going back up again. So let's check the numbers to see if
this is probably when something bad happened and perfect time to buy.
Yes, exactly. Yes, exactly. Good.
Actually, this is probably when Hillary started to lead, and bank regulations are going to be ruined. And
yes, you're exactly right. You're exactly right. So breaking the numbers down for you, looking at Capital One Financial, we see sales are up 10.7%. Unfortunately, earnings down 1.4%, but not bad numbers. And again, you got to understand those earnings, don't you?
Oh, absolutely. And you know, still, even though it's at near its 52-week high, it still could be a great company. And we're going to kind of continue to look at this and see PE ratio 11.3, below the industry average 11.9, and price to cash flow. Another measure I love to measure is the cash flow ratio, because cash flow is so important to business. And you see 6.3. well below the industry average of 18.8. So great valuations to start here.
Right. I want to point out to Robert Schiller, Professor Robert Schiller, a Nobel Peace Prize winner, went back to 1870, shows if you buy companies around 10, 12 times earnings, you do pretty well. When you pay 15, 20 times earnings, you don't do so well.
And you got to make sure they have a strong balance sheet.
Yes, strong balance sheet every time.
I didn't see no current ratio. Well, that's because the company's a bank, so they have a little bit different structuring here. Debt to equity, 90.2%. Again, I will warn you that you have to really understand the balance sheets for these financial companies. This looks to be pretty strong, but you have to dive down deeper into the numbers. And finally, another valuation ratio, price to tangible book value, 1.2, below the industry average of 1.3. So that's looking like a great value here.
Right, and I like those numbers. In addition to that, you got to look at the earnings going forward. What is this company going to earn going forward? Well, here we see on December 2017 earnings per share, $7.93. Target price, $130. Check out this. Current price, $81. $130, $81. You got some potential growth there, don't you?
Absolutely, and I think you should be a little bit patient. Don't be too greedy, though.
Right.
And kind of wait for a good price on this company.
Exactly. I agree with you there. So, all right. Well, thank you for joining us today for our Smart Investing Briefing.
And did you miss today's video live? Tap on the follow button down below to opt in for notifications the next time we are live.